In this video, I'm going to explain what a swing low is in the stock market. On my screen here is a stock chart, and this is for Amazon stock. And each of these price bars represents one day of price activity. And if you look up here, while I mouse over any given bar, you can see, for example, you see this, there's a letter O. And I moused over this bar, the letter O, it shows a value of 186.28. That means the opening price of that bar was 186.28. Now let's focus on the L. That stands for low, and that shows $184.80. That's the low of this price bar. Okay, so each of these price bars has a low price in addition to an open price, a high price, and a close price. The low price is what we're going to focus on in this video. And so each of these price bars has a low. Now a swing low is a special type of low. So if you're looking at these different price bars of activity, each one has a low, but certain bars have a special type of low that's referred to as a swing low. And in particular, a swing low is a bar where its low price is lower than the bar directly preceding it and directly following it. And this is a good example of one of those. So if you look at the low price here on this bar, it's lower than the bar immediately preceding it and immediately following it. So this is a swing low right here. Now let's look at this bar. The low here is a little bit higher than this low. So this could not be called a swing low. The same is true here. If you look at this low, although that one is higher, the one before it is not higher, it's lower. So this is not a swing low. This is a swing low. Let's find another example. Right over here, you can see that this low is a little bit lower than the one to the right of it and to the one to the left. As long as it's lower, it doesn't matter whether it's a penny or just a couple cents lower, it's still a swing low if it's anything lower than the bar immediately preceding or immediately after it. So this is a swing low. Some of them are just not very pronounced, some are. Let's look here. This is a close call. The low here, if you look up at this L value up here, when I mouse over this bar, that's 185.33, and the one to the right of it is 185.42. So this one's just a little bit higher, and therefore this is considered a swing low, because that's a higher low and that's a higher low. Now, why do swing lows matter? They are considered by some to be an indication of where there might be support for a given stock. And by support, it means where there might be buyers who are lined up and ready to buy if the price gets to that point. And the idea is that if at some point in the past the price was coming down and it stopped and turned around, whatever that point was where it stopped and turned around, that the reason it turned around might be because that's where buyers were interested in stepping up and placing orders. In other words, at that price point, there were more buyers who entered the market and were ready to buy the stock at that price. And that's why it sometimes is considered support. It's as if, well, if let's say the price had ended up coming back down to this level again, right where this prior swing low was, maybe that same wave of buyers, maybe that same type of group, some group with a similar mindset would want to buy again if the stock gets back to the same point where last time it reverted. And so that's the idea behind a swing low and why people look for swing lows on stock charts. One popular idea is if the price does get near a swing low, like if this price were to come back down here, you could buy at a price perhaps just above the swing low, and maybe there'd be support right there where the price, maybe the odds are in your favor that the price won't go down below the swing low or very far below the swing low, because maybe that wave of buyers shows up and props the price back up. So some people like to make trades based on using that support level from a swing low. And when you hear about support and resistance, support is based on swing lows. That's how you define what a support level is. And it's typically said that the more pronounced a swing low is, like this one is very pronounced, versus this one, you can hardly even tell that this is a swing low. We had to like really dig into the detail just to confirm this even was a swing low. The more pronounced it is, potentially the more pronounced of a support level that it is. The more support it might offer for a potential trade setup. Now there's no way to know for sure when a support or swing low level is going to hold as far as the price and when it's going to offer the basis of a profitable trade. But what we do at Stock Market Guides is when we see stocks that get to a support level or where the price is approaching a swing low, what we do is we share with you historical details about what has happened in the past for this specific stock when it's come down to a support level. Has it offered a profitable trading opportunity more often than not? And if so, what exactly are the statistics for it? That's what we do. We look at historical price patterns and tell you how given trade setups have performed historically so that you can make informed, educated trading decisions. So if you like the idea of using swing lows as a basis for making trades, what we can do is offer you information that gives you help in deciding whether or not for a given stock that swing low is one worth considering. If you have any questions about how swing lows work or just in general about the stock market, you can contact us anytime. Our email address is support@stockmarketguides.com.